Felix here, and slightly dazzled, baffled, and confused. GDP growth rates come in, and it's not the 0.4 or 0.6% people were expecting. No, it's minus 0.9%. Minus 0.9%. The American economy shrank 0.9% quarter on quarter. That's an annualized quarter on quarter, just so you know that. Of course, none of the following is going to be financial advice. Nope, there we go. Where did we go? Oh my God, what happened? What happened? All upside down this morning. That's what happens when the economy shrinks. Here we go. GDP growth rate quarter on quarter, 0.9%. That's pretty bad. Jobless claims, we were expecting 255,000, that's 256,000, so slightly, basically at the upper end of expectations. You could see that as a moderately positive sign. So what does this mean together? Well, it might just mean that we thought yesterday that Jay Powell was a little bit more softish on us. He mentioned economy slowing down and so on, and that they're going to watch the data. Well, this bit of data is definitely something that is saying, the economy is definitely shrinking. Now, what's going to happen though? Well, Biden's going to come out and a bunch of other people are going to come out and they're going to say, no, this is not a recession. No, of course not, you fools. This is a technical dip in the GDP indicator, and don't pay any attention to this. It's all about imports, and no, we're not in a recession. Are people believing that? I don't think so. This is the second time in a row that we've had this 1.6% down, 0.9% down. To me, this is a recession. I don't know what it is to you, but if you just see where we are here, this is a recession. We were there in 2008, 9, that sort of thing. So what does it mean for the market? Do you want to know? Okay, let's have a look at the futures here. Before this all happened, Nasdaq had turned red already. S&P was a little down as well. Let's have a quick glimpse at the live market here. Let's have a quick glimpse at the QQQ. Now, you would expect the QQQ might quite like this. And extended hours, it's down 0.77%. So why is that then? Why is it down so much? Well, really, I think the party was overdone a little yesterday. I think 4.2% in one day in the QQQ is probably a little bit more than makes sense. And therefore, that's what we're getting to here. Apple declining a little bit, Snap down a bit, QQQ down now 0.6%. So it's improving, actually. Amazon's down, Nvidia, basically everybody who had these massive bounces yesterday is selling off a little bit. Who's up today? Plug is up. Did they report earnings or something? Something I missed? Have a look. Any headlines? Did we get any headlines on Plug? Nope, nothing as yet. Not sure why that's up. Etsy is up, reporting today. Tesla is still up, 1.2%. MasterCard bouncing up as well. Everybody reporting earnings. What's bleeding the most? Teladoc, Beyond Meat, and Meta now down 4.4% here today. Mullen also down 3%. Where are our Chinese EVs? NIO is down 1% to $19. Palantir up down just 0.5%. So what's going on here today? Well, this is actually what we were expecting. We were told we would get a 0.4% increase, and that is not true at all. We got, wow, that's a big pen. Let's make that a little bit smaller. We didn't get this. We got a minus 0.9%. Now, Jay Powell said yesterday these numbers do get revised a lot. Yeah, they might, but they're not going to revise away almost a 1% drop in GDP. So the US economy is shrinking the second quarter in a row, and despite all the explanations we're undoubtedly going to get from people in government who wish to get reelected, it's definitely pointing downwards. You know what's really pointing upwards? Our options portfolio, we're up 123. Actually, no, we're up 127, aren't we? Here we go. We're up 127%. All of these lovely trades make up that number. Lots of small trades. We took about $300-something yesterday in profits. Here you can see the present portfolio. At the moment, $570 profits. So I will probably take some of those later today and then set up a couple of new trades. And that's just the way it rolls. So that's good news. You can, of course, join us at felixfranz.org/options. Coupon code FREEDOM for 41% off. Felix friends, sort of options links down below as well. So who's reporting today and why does it matter? Well, after the close today, Apple, Amazon, Intel, where you got this morning, MasterCard, Altria, a few big ones, Pfizer also. Should we have a Pfizer trade, don't we? How's our Pfizer trade going? Pfizer down just 0.38%, and our trade allows Pfizer to drop another basically $3, another 8% down. That seems like a good setup, the way it's meant to. Today is in fact the day of all earnings. Today is the I don't know what, Christmas of earnings. That's where we are today. About 130 companies or so reporting today, and then it will slow down a little bit. Next week will also still be fairly intense, but that's kind of then the end of it. So this today is actually the peak of earnings. It wasn't yesterday. I know a lot of people were thinking that. Meta reported their first ever quarterly sales decline, shrinking advertising budgets. Shares dropped 4% in late trading, and they are down as we speak. Where did they go? Where is Meta? Meta still down 4.4%. So, okay, let me just have another look at the QQQ. 0.5%. So the QQQ is recovering. It was down 0.8, now it's 0.5%. So the market is absorbing the GDP data. Ford basically said, we have too many people, and they're going to slash jobs. Bloomberg reports as many as 8,000 salaried positions. I don't know if they have non-salaried positions, sort of freelancer type contracts, possibly. And that's, of course, again, going to feed into the whole jobless debate that Jay Powell wants us to have, which is basically we need more unemployment. So that's an interesting one. Now, this is obviously the most important chart of the day. Hampton's home prices are setting another record. The median sales price is now 1.6 million, which I understand gets you about half a garage and space for a chair or a golden retriever, one or the other in the Hamptons. So prices are rallying there. Why? Well, people with assets have had a really, really fantastic couple of years here. So nobody's suffering there over there. So let me see what questions we've got here. Let me just move this over. Somebody said yesterday, I need a Windows manager. I think that's quite true, actually. Charge point up 10%, indeed. GDP number is correct. Mihai here is correct, a minus 0.9%. You think it's good news because it's weaker? It isn't weaker than last quarter. No, we were expecting it to be positive. So it's bad news for the real world, and it's good news for tech investors. It's a technical pause, a planned economic pullback. Yeah, there are going to be some really good phrases out today. Absolutely. Good morning to everybody. I'm just seeing any comments here. Run still running 14%. Yeah, do you know why? I don't really know why. I don't really follow that stock. Do you want to have a look at what the reaction is of the market? US economy shrinks for a second quarter, raising recession odds, or it's a recession. Futures dip as Fed rally stalls, earnings in focus. There is this kind of energy sort of deal, right, in the offing. I think it's largely revenue neutral in the sense that they're actually raising taxes and then spending it. So I don't think it's going to have a huge impact, really. But there we go. US jobless claims fall slightly, hold near 8-month high. So that isn't really the good news here. And Ford says we absolutely have too many people. Absolutely. And the dollar is very, 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 very strong, continues to be. Look at that, 106. It's bouncing up again, another quarter percentage point here. And the S&P down 0.38%, volatility completely flat. Orange juice falling, which I know hits all of your portfolios very hard. We all have big orange juice future portfolios, undoubtedly. And let's have a look at, oh yeah, this one here. Did you see this? Palantir, US Army Research Lab expands artificial intelligence machine learning contract with Palantir for 100 million. Well, 100 million minus, a stamp. So that's, of course, good news. That's been going on since 2018, I believe. And I think it's a good thing because it's the research lab. So it kind of gets Palantir in at the very beginning of all the, planned new innovations and products that the US Army puts out. So it gives them an insight into like everything that's going on. So I think that's definitely a good one there, not just from a monetary point of view, but to ensure that they are relied upon. QQQ now down 0.5%, so improving a little. If we open that up here, can we open that up? Here it is. Let's have a look at the price here. So we got GDP data came out. What happened here? 8:30, right? This is when the GDP data came out. Sorry, I know I've got a lot of indicators on the screen here. Let's get rid of a few of them. So it dropped immediately. That's the people who didn't know what they were doing. And then now it's bounced up, which makes a lot more sense from the QQQ point of view. If we look at SPX, we already are. There we are. What happened to the SPX? Oh, it doesn't trade. There's no pre-market on the SPX. Okay, we have to take the SPY then. SPY. Hey, there's no pre-market on the S&P? Really? Isn't there? Normally, there's a little option here to show extended market hours. Not so. That's very peculiar. Oh no, pre is down here. Pre's at 400. It's just not showing it to me on a minute chart for some reason. All right, so we've dropped, which makes sense, right? So real economy, not so good. The techie economy, I'm just changing my aircon remote here. The more techie economy would like it if interest rates didn't go up as much. So do we have a technical recession essentially? Well, to you and me, yes, but there are a bunch of people in Washington who get to decide whether the US is in a recession. It's not automatic. It has to be declared. It's very strange. ES1. Okay, thank you very much, guys. I appreciate that. Goes to show how often I look at, futures. Okay, that's one way of looking at it. Yep, thank you very much. There we go. So you can see this was 8:30 and S&P tanking while not really tanking. It's kind of came down. It's coming back up again. But broadly, you'd think the market would actually quite like this because we get a recession sooner rather than later. This whole nonsense is going to be over with sooner rather than later. And look at that. We've got a nice little bounce here in the market. Thanks very much for everybody typing in ES1, much appreciated. Tom says it'll be fine until the earnings report today, which might hurt the market. Well, so far, I mean, okay, we're getting Apple and Amazon today. That's obviously big. Intel also big after the market today. Those are the three big ones to watch out for. Apple and Amazon being far more important, I suppose, than Intel in this space. They can miss earnings. They can even give cautious guidance. It just can't be like a cataclysmic, horrible miss. Like, Meta wasn't great, Microsoft wasn't great, Google wasn't great, but they went terrible. So that's all we need in this market. We need it for it to be not terrible. And that's also how I've set up my trades on this. My Amazon trade, for example, here. Well, actually, it can go to 0. I don't really care, but it can't bounce up more than to 133. So it could basically go up 11%, and I'm still collecting my max profit. So it's a very, very wide range. So I would be surprised if we get movements like that. My Apple trade here, let me also show you. I'm a little bit more positive on Apple. So Apple could essentially drop to $143. So what is that? I don't know. 7-8% or something, which seems also fairly unlikely, and we still collect max profit. So that's kind of how we play it. We're basically market neutral, don't really care which way it goes, as long as it doesn't move more than, say, 7, 8, 9, 10, 11, 12 percentage points today, basically. So QQQ, hang on, it was up. That was a lot better, wasn't it? QQQ now down only 0.28%. So really improving here. Teladoc absolutely tanking, 22% down. What did they report? Teladoc sank nearly 25% pre-market after climbing 6% in previous session. They reported a widening Q2 diluted loss while revenue rose. Okay, so people are just not liking that. Teladoc. So if you are trading options like me, stay away from stocks like Teladoc. Anything a bit Reddity, anything a bit memey, stay away from it. It just does these things, and you don't want to be part of that. Beyond Meat also down 5%. Meta down 4%, sort of leading the sell-off. And what's leading the rally? Plug, ChargePoint, probably in sympathy with Plug. Which of these reported? ChargePoint got a $4.3 million award in California, and Plug, no idea. I never really follow these particular two ones. I still don't get the business. If somebody can explain it to me, I'd be most grateful. Etsy, nice jump. I didn't do a trade on that. I can't remember why. I think it wasn't very profitable. Earnings of 51 cents. We were expecting 0.32, so that's an earnings beat. Revenue for the quarter was 585 million, which is more than last year and is better than expected. They expect Q3 revenue to range 540 to 575, so quite a big range here. And the market was expecting 570, so they're still within, okay distance. Nothing to get freaked out about, and that's exactly all we need at the moment. Derek says 350 watches. Throw us a like as a thank you. I'd appreciate that, Derek. You honestly have no idea what a difference you make by pressing the little like button. It's basically how the algorithm decides whether or not to show this video to another person. So I truly, truly appreciate it if you smash that like button. Winston also would. Tesla up 1.76% to 8380. MasterCard, nice recovery. Didn't they report today as well? They did this morning. What did they report? There we go. 256 profit diluted, up from last year, and that's a big beat on expectations on 236. Net revenue was 5.5 million. We were expecting 5.26 billion, so a really big beat. Inflationary pressures had not significantly impacted consumer spending in Q2. So that's a good one. It's pretty much what Visa said, pretty much what Amex said on Friday as well. So that's a good one. We got an MA trade. Yep, we do. And now you might be wondering, why did I set this up as a bearish trade, right? So the left means I wanted to go down. I don't really. It's just I like to balance the portfolio so not everything is bearish or bullish because it just makes it more risky. So this is trading at 348. My break even is 367. So it can go up like 7-8%, which seems unlikely even on this smashing return. So I could close this right here, right now, if I wanted to make $150 basically pre-NL open. I'll have a look at that in a little while, whether or not that's a good thing to do. I think given the wide range it has, we probably let that sit a little bit and at least wait till the market opens. So that's good news. Good news from MasterCard there on the state of the economy, despite GDP numbers pointing the other way. Palantir up. That's likely on the announcement of that Army contract, another $100 million. NVIDIA is now up as well, 0.6%. Visa is up in sympathy with MasterCard. Amazon just about breaking even. And then we go into the red territory, which is still a fairly long list, but I think it might just turn around. Probably not for Teladoc. But for everybody else, I think it's just looking rather good. Why? Because we have a list here of largely techie stocks, and they obviously like a worsening economy. It sounds nonsensical, but that's just the way the market works. Robert, the Microsoft earnings call reminded me of why we should invest in good companies and let our money grow while enjoying life. Yeah, I absolutely love Microsoft. I think they've just done such a tremendous job over the last 20 plus years. I really can't fault them at all. And Oleg, you're quite right. Visa, Amex, everybody has incredible user data. So it's very, very useful. Iku saying GDP negative. Does that mean we're in a recession? To most people, yes. If you ask people in Washington, they'll say no, because they get to decide it. Yusuf says it doesn't make sense. Negative market is rallying, but the data is negative. Okay, let me. I know it's counterintuitive to a high degree, right? What do we want? We get. What's happening is that if we get higher interest rates reduce the value of growth stocks. So if interest rates goes up 1%, the value of our growth stocks goes down about 9%, something in that magnitude. So therefore, what do we need for interest rates to stop going up? Well, we need demand to fall. That's all that the Fed can achieve. If demand falls, that means the Fed is happy, right? When the Fed is happy, they stop raising interest rates, and therefore the value of our tech companies go up. Why is that the case? Well, the way we value a tech company is we use a discounted, I know my handwriting is terrible, cash flow model. So what do? We go forward about 10 years. So in 10 years, say the company makes $1 billion profit per year, then we have to bring that back to today's value. And what do we factor into the discounting? And it's the example I always like to give is, if I give you $1 billion today or in 10 years, when would you rather have it? Well, you'd rather have it today because you can grow that money, right? It's worth more today than it is in 10 years. And inflation, of course, plays a big part in that. So inflation and interest rates, so basically risk-free returns, and the interest rate dictates the risk-free return of the US government bonds. So what that means is that if essentially interest rates come down, the value of growth stocks, of tech stocks particularly, go up. So as the market's forward-looking, the market in this particular instance likes GDP to be falling. Iku says, Stockmo says he's buying. Well, I'm always buying. I don't really pause. I don't think timing the market is something that we're very likely to get right. If you miss the top 10 days in 10 years of investing, you make no money. If you miss the top 20 days in the market over 10 years, you lose money. So yesterday might have been one of the top 10 days in the decade, right? 4% up, 4.4% up on the NASDAQ is pretty unusual. So you could have missed that if you're sitting on the sidelines. How the heck do you know in advance that it's going to go up? Like, how does anybody know? I certainly don't. If you do, would you please let me know how you find out? Because I'd like to be part of that insider racket you've got going on there. Tech Only asking, why did you start with options trades this year? What did you do the last years? Have you also got a track record for that? It's not particularly well documented. It's simple as that. So I have been options trading for quite a few years, but the discipline to record every single trade like this is not something you generally do for yourself because you're making money. So I started doing this really for the benefit of the community so that I can share the trades and people can see exactly what I'm doing as I'm doing it, which is why I started this randomly for the 1st of January. I just thought it'd be a good time to do it at. So that's the reason for that. Tesla pre-market, interesting. Yeah, it's indeed very nice in green. So if we're looking at the futures, this just still shows that they're red, but I think they might already be green. Let me have a look here. QQQ. Nope, that's still down 0.18%. But getting there, which is good. We were down 0.8% just half an hour ago. So the market turning around nicely. Good earnings numbers out just from MasterCard, which is always a good indicator. And the market, generally speaking, absorbing all of these earnings shocks very, very nicely. Meta down 4.5%, but that's a reasonable response, right? 20% isn't a reasonable response. So I think that's definitely a good one. Tech Only, well, welcome to the community. I look forward to having you in the program and look forward to seeing you make money, because that's really what it's all about. So if you wish to do as Tech Only is doing, then check it out, felixfriends.org/options. The coupon code is FREEDOM, 41% off, and we are making money. We're making money today. We're going to make a lot more money today, and we're going to make money tomorrow, and we intend to make money every week and every month, which is what we've done so far this year. So check it out, felixfriends.org/options. A huge thank you you to everybody tuning in and watching and building this community. Truly, truly appreciate it always. So let me have a quick look then at, let's have a quick look at the market reaction to this. Let's have a look at Bloomberg. Let's have a look at Reuters. Let's have a look at Wall Street Journal as well. Why do I do that? Because the public press reaction matters almost as much as the data, because very few people look at the data and come to their own conclusions. They get led by what they see. Crikey, that's a picture and a half, isn't it? Biden pledged to tax wealthy companies, revived the Manchin-led bill there. Yeah, okay, that's going on. If it's revenue neutral, I don't think it makes a big difference to the economy. Okay, not a lot on here. Looking on the bright side, JetBlue wins the takeover battle. Interesting. Wall Street Journal, U.S. economy shrank on an annualized 0.9% last quarter. Yep, it did indeed. But look, they're still predicting positive Q3, Q4 numbers. They also did that for this one. People never really learn, right? I don't know why Q3 will be better than Q2 was. Second, a common definition of recession, yet no one's willing to call it a recession. Isn't that bizarre? No one's willing to call it a recession. What are these guys up to? Okay, there's a rave in Kiev. That looks like fun. So that's the big story of the day. GDP numbers falling 0.9% in the US. I'd call it a recession. At what time is Amazon releasing earnings, says Anthony, is straight after market close. So it'll literally be like bang on market close, I think. BRP, do you have a program you can exactly copy my trades? Well, I do announce my trades. I also do live trading every week. I strongly recommend you don't exactly copy my trades, because then you don't learn anything. It's the lazy approach, sorry to say it, Juan. What you really want to be doing is learn the method and the strategy, and that's what I teach you. And that way, you'll be able to make money yourself. Isn't that much better? That you actually learn a skill than simply like copy along and hope that I don't bump my head and lose my mind. How would you know that I didn't bump my head and lost my mind that day if you have no idea what the heck I'm doing and you're just blindly copying? So this whole copy trading thing, I think it's a dangerous thing. I can see the appeal in I will make money. I don't have to do anything for it. But I strongly recommend not to do that. I don't know what's going on here with the banners. There is the banner. There we go. So check that. The links down below, felixfranz.org/options. If you literally just want to come to copy, please go somewhere else. If you want to come and learn the strategy and become a proper, confident, profitable options trader, then I'd love to have you. And I'd love to teach you, and I'd love to show you the strategy. And you'll have a community that will really support you, and it'll be great fun and just profitable. I mean, profitable as heck. We're up 28% so far this month, 127% up this year. These are all the trades. I keep a record of them. I also announce them all live, yes, and I also do a lot of them on live streams every week that the program members can be part of. They're also recorded, and as I keep showing you also the portfolio, you can see them here. So we've got a MasterCard trade open, for example, obviously relevant. These are all earnings trades, and that's already at 80% of profit or something like that. So we could take those profits right here, right now. And essentially, we are market neutral. We don't really care which way it goes, as long as it doesn't go out significantly in the wrong direction. And by significantly, I mean that MasterCard trade could go the opposite way of what I thought it would do by, 8% or something in a day, which is pretty staggering. So very high probability trades. But yeah, please don't just come and copy. It's a waste of your time. You don't learn anything. What's the point? Yux, we haven't replied to you on Discord. Okay, you said that yesterday, Yux. I apologize. Really, I aim to reply everybody every day. I always look every day. I'm going to look right here, right now, and I'll show you what the market's doing at the same time. Look at that. QQQ, nice recovery. The S&P futures going off the chart. Yux. Oh, Yux, okay, you're trying to sell me some TikTok promotion service or something. That's very kind of you. I'll get back to you if you ever have a need for it. At the moment, we are actually going to launch TikTok probably in the next week or two, but we are not quite there yet. But I appreciate your persistence since. Let me see if I missed any questions. I think not. If I did, then please post it again. And of course, you're very welcome to ask questions. All you got to do is hit the subscribe button and you can comment in the chat here. You don't need to be a member or anything like that. You just have to hit the subscribe button and you can ask me anything and I will do my best to answer every single question. But yeah, very, very nice reaction here from the market. Though if we look at the QQQ coming down a bit, breaking through the 30-minute moving average line here again. So that's a little bit of a bearish signal, not a sell signal as yet, but it's a bit of a bearish signal. And the S&P, on the other hand, is off to a flying start this morning because it just reaffirms what Jay Powell was saying yesterday, that we have some economic indicators pointing towards softening demand. What is softening demand more than a 0.9% drop in GDP? Well, to me, that's a recession, second quarter in a row. Mick, where do you find the earnings map at icons or maybe companies on earnings whispers? Mick, yeah, I think I joined that community and they send it to me, Mick, but that's definitely useful. I'll keep sharing that with you. Of course, there are lots of earnings maps out. I mean, people sometimes ask, where do you get them from? I mean, Google is a good place to go. Oh, this one actually, earnings whispers. Honestly, that was posted on the Discord. It was posted on the free Discord even. So somebody posted it, and it's a good one. That's pretty up to date. But you could literally just type that into an image search on Google, and I think you'd find the same thing, and just filter your time frame for the week. Do you invest in A shares? If you mean Chinese listed shares, no. If you mean A quality shares, as in your sort of, I have shares in Amazon, in not in MasterCard actually, in Visa, in Meta, in Google, in Microsoft. Here's Visa. I actually own Pepsi, not Coca-Cola. But yeah, sort of not reputable companies, but companies that are consistently making money and have done so for a long period of time, have a wide moat, a whopping gross margin of ideally 60-70%, and very, very nice high ROIC numbers. That's where I put my money for the long term, and that is compounding very, very nicely. So yeah, thanks for the question. Do you think the bull frenzy will continue? I think it'll come and go, to be honest with you. I think we might still get some worse numbers here. And I think once we really get into recession and people see the impact of that in earnings for a big sector of the economy, then that will again hit people and surprise people. But essentially, that's the only way out of this, right? The only way out of this is a proper recession. So do I think it's the bottom of the market? That's basically my answer. Who knows? Nobody's got any idea. I just think if you were buying stocks a year ago or a year and a half ago, why wouldn't you be buying them at these discounts? Did you foresee that the QQQ would rally 4.2% yesterday? If you did, then brilliant. And please keep timing the market. If you didn't, which I suspect you didn't because nobody did, then what's this whole timing the market business all about? Like it's just statistically highly likely that you lose a heck of a lot of money by doing that. You miss the top 10 days per decade in the market, you made no money. Seriously, no money. So yesterday could have been one of those days. So if you're sitting on cash, you missed it. And then you're thinking, oh, well, is it going to come down again? Is it going to go up again? When am I going to buy it? And you just miss. So it's compounding only happens when you're invested. If you want to make money in the short term, which I do, and also if you have itchy fingers, which I do because I'm not not all that calm really, then make money with us, do options trades, and you can enjoy the moderate frenzy. It really isn't a frenzy, but you can do something every day that makes you money. Yesterday was 27th. Yesterday was $530. The day before, I closed out $310 or 300. It was 330, I thought, 310. So if you want to make these kind of returns, 127% for the year so far, it really is so far. We are only just halfway through it. Then you can do that with options with a really high probability and a solid strategy. None of this gambling, none of this buying leaps, none of this buying call options or buying put options or any of that. We don't do any of that stuff. We leave that to the retail market. we stick to what actually makes money. Lala, thank you very much. Okay, you meant China A shares. No, I've never owned any China A shares, I can't say. Biden speaking to China today, I don't know how much is going to come out of that. I think the Pelosi noise isn't going to really help anybody, so I don't expect a lot there, to be honest with you. What are your thoughts on delisting of Chinese stocks? I think I've done so many videos on delisting. Honestly, please go watch them. You kind of get a feel for where I'm sitting. I don't think it's in anybody's interest. I think it would be a huge, be a disaster if it were to happen. It would destroy probably 60% of the 1.3 trillion in shareholder value. That's sort of where I sit with that. So I think it would be a real horror. I still have hope that they will sort it out at the very last minute, but it'll be the very last minute. What's the Chinese index? Well, there are a few of them. How much money do you need for options trades to make sense? 50K. 50K is plenty. Basically, think about if you want each trade to be about 1 to 5% of your portfolio max. So if you've got 50K, each trade could be $500. That's super easy to do. If you see here, these trades, for example, this is the buying power used, how much capital you need to do it. So say if it's $2,500, but I did 10 trades, so actually one of them will be 250. So you would just do 2 of them and just keep the position sizing really small. But yeah, with anything over sort of $5,000, and it's very, very easy for you to do. I failed to register an interactive broker, so I'm not made for options trading. Well, if you're going to give up at the first hurdle of not being able to register a brokerage account, that is, of course, up to you. If you want some help with that, super happy to provide that to you. We help a lot of people with brokerages. We also teach you how to use interactive brokers because it's not the most intuitive platform in the world. I think that's fair to say, but it's just a little hurdle you got to get through. And the reward is 127% returns and just making money and smiling every day. So if you want some help with that, Coco Frog, drop me an email. I'll gladly help you out on that. But if that's the hurdle you're going to fall out, then maybe the whole thing wasn't for you. Felix at goatacademy.org is my email. Just drop me a line. I'm glad to help you out. And let me know why you couldn't get the account. And we've done this a couple of thousand times. So I'm sure we'll be able to figure it out for you. Should I sell in as anticipation of the market flipping? Only if you have a crystal ball and you know what's going to happen in the market. Otherwise, don't. Someone's impersonating me on Instagram. Entirely possible, Chris. If you could drop me the account, or just report them if you think it's nonsense. I don't really use Instagram very much. I post the occasional story because the Facebook and Instagram thing are linked, but other than that, I don't really post very much. Coca Frog, much appreciated. So yeah, let's have another look at where the market's heading. If you didn't see this, by the way, if you're parliamentarian, a $100 million contract from the US Army Research Lab extended. That's a deal that's been going on since 2018. So that's definitely good news. QQQ is now down 0.36%. So it's come down a little bit. Here it is. This is the QQQ. This is the S&P futures. They are kind of bouncing off that support line here, the 30-minute support line. This is a minute chart, so don't get confused. QQQ now trading below that moving average line, so going sideways rather than upways. And GDP numbers, if you missed them, are down 0.9%. A bit of a shocker. Jobless claims are still pretty low. I mean, pretty low. 250,000 initial ones. We're expecting 1,000 less. Doesn't make much of a difference. It's moderately less than last month. So, people are still being hired. The Fed won't like that. But obviously, this GDP growth rate is going to mean something. GDP Price Index, by the way, is another inflation measure. That's at 8.9%. We were expecting 7.5%. So, ouch, right? That's something to take into account. Now, what the Fed looks for, though, what they said again and reiterated again yesterday, is the PCE Price Index. He said that's what he looks at. That's the most important inflation measure out there. That's out tomorrow afternoon, well, same time, same place. So join me tomorrow for the PCE data. That could literally change the market again completely. And then we get Michigan consumer sentiment in again. If that falls below 50, that would be another, another indicator that we are in a recession, which I think most of us know, but obviously Washington doesn't want you to know. Can you use a Saxo options account? Yeah, you can literally use any options account you like. It's just, I encourage paper trading so that you can practice without losing your money. So for that, if you are in Europe, Interactive Brokers is your only choice. It's not the most beautiful platform, but don't worry, we've got lessons on it. We teach you how to use it. And then after that, you can use Saxo or Tastyworks or whatever it is that you wish to use. But it's just, I really, really recommend you use paper trading so you can learn and fine tune your strategy and learn all the little bits and bobs as they move and see what happens when you get assigned and see how you can adjust and roll and do all these magical things. It's hard to learn the theory without the practice. IBKR, is your money safe with a broker? Okay. Cash is never safe with a bank or a broker because it goes up in smoke with the bank or the broker. Stocks or options even are. Why? Because you own them. They're not legally part of the company. So as long as your stuff's invested, I think that's the best risk management strategy you have. Having large piles of cash in bank or in brokerage accounts, definitely not a good move because they can go out of business and yes, you will lose most of your money. Just like those crypto banks, right, that are decentralized, the same thing. You can see options trading calculators that tell you the probability of a trade succeeding. Is it that simple? Is there much more to it? It's useful. So, I mean, I use one myself. I use optionstrat.com, which I think is brilliant. And I can click on something like this and I can say, hey, I want to trade on Pfizer, which I have one open. I want it expiring by next month. I want a high probability. And then it'll say to me, okay, you could do a bull pit spread. I mean, it's very, very nice. It gives me a 90% probability here. Is that everything though? No, it really isn't. Unfortunately, there is a little bit more to it. There is volatility to it. There is some technicals and some chart to it. There's diversification and correlation to it. You need to have the full strategy, the full package. The riskiest options portfolio is the one with one trade because it's like going into a casino and doing one flutter. Or rather being the casino and one person walks in with $1 billion in cash. You wouldn't accept that trade. You want 1 billion people with $1 each. And that's essentially our strategy. We are the casino rather than the gambler. So there's a lot more to it. Moon, indeed, your stocks are not on the balance sheet of the bank. So that's the best thing to do. Probability does also change, absolutely. So you do also need to know how to manage trades. I mean, that's again something, and that's again why I really encourage paper trading so that you know what to do. Like if you look at a trade here, I mean, they are all rather beautiful, nothing, but you know, say Amazon moved up all the way to the top here, right? Well, what could I do about it? Well, I could do all sorts of things about it. I could add trades to it. So I could add another trade. And then if we see, and suddenly, you see I just turned that trade around? So this is the current trade. It's making money here in the green zone, and it's losing money above 132. If I bought a bunch of call options, not a great strategy, by the way, but just as an example, I'm suddenly making money in the area where I was just losing money. So you can do all of this, but again, it's something you're going to want to practice, something you're going to want to learn without the pressure of losing money in your neck. Do you prefer bull puts or bear calls? Yeah, I generally like to get, it really depends on the setup of the stock. That's really what it depends on. It isn't really a particular preference. I like to get credit up front, generally speaking, but the direction, you want to be balanced. You want to be neutral. And Miskev, if you have stocks in any broker, as long as the stocks, money is in your stocks, you will own the stocks. The broker goes out of business, you fill in a form, you send your stocks to another broker. As simple as that. It doesn't really matter who it is. I'm not saying IBKR is the world's greatest broker. It certainly isn't. It's bloody complicated, but it's as good as any brokerage out there. Mick, I'm watching your master options videos for the third time last night, learning something new every time. Mick, that's absolutely wonderful. If you want to take it another level further, you know we also have a coaching level as well, where you can learn one-on-one with me and my head coach. So if you want to check that out, Nick, have a look at felixfranz.org/coaching. Just book a call on there and have a chat with Cheryl if that's something that is a good fit for you. as well. I don't trade gold or silver. No, I'm curious. I'd be interested, but I haven't really. What put me off, I think, was all the manipulation, JP Morgan, that kind of thing. So it kind of worries me a little bit that market is a little bit of an odd one. I haven't got earnings, right? I struggle with stuff that doesn't have earnings. I like it when there is an underlying metric I can look at that gives me some real insight into the market, into what it's actually worth. Teladoc still cratering, down minus 18%. Neo down 0.7, which is much more moderate. Netflix down a touch, 0.4% down. Really flying is Plug and Charge, 0.16 and 99%. Tesla up 1.7%. Palantir up 0.7% on the news, I think, of that US Army lab contract of 100 million. But the market turning a little bit more red again this morning. So the enthusiasm isn't quite sustained. QQQ is down 0.2% now, much better than it was this morning, but nevertheless still a little on the red side. I want to say a huge thank you to you for watching and tuning in. Much appreciated. I'll be live again tomorrow, same time, same place, for quite possibly much more important data. PCE. I know you all wake up in the morning going, what's PCE today? It's an inflation index that Jay Powell is in love with. It is the Fed's favorite inflation measure. So it actually matters probably much more than GDP this morning. So come and join me for that. And hit the subscribe button. That's all you got to do, really, to make me very happy. And have a beautiful day wherever you may be. Thanks for tuning in.